Hey everybody, this is John. Welcome to the free video. I'm actually in Austin. It feels like a long time since I've been here. So in the room today, we did a trade on Facebook, and I'm going to show you a little bit what we did. You can see here that I'm long 1,700 shares of stock at an average price of $91.90. We did deliberately try to buy some shares down here near the expected move with the idea that if we came down the expected move, that we could potentially bounce back up. And you might be asking, well, John, what would happen if it came down to the expected move and just kept on going? Well, we bought some $88 puts beforehand, okay? So at this point, I think I'd lose $1,700 on those because I bought 20. I tried to buy 2,000 shares. I only got filled on 1,700. I didn't get filled on the last 300 because we spaced them out. And anyway, so that's what's going on there. So far it looks good. Of course, Facebook could roll over and die. Okay, but obviously what I'm hoping happens is more of what, like, say, Chipotle did, where we come down, you get filled, you get some guidance, and then you take off. We'll see. So overall, the way this trade was structured was bullish. In terms of an options perspective, I did sell the 96.90 put credit spread for 226 right before earnings with the idea that hopefully tomorrow we'll be at 96 or above. Okay, right now obviously we're not there. At this point, if we opened up at $95.36, that would be fine. And then these are the 88 puts that I bought for 86 cents. That was meant to be insurance in case I got filled on all 2,000 shares and the stock got destroyed. So you can see I got some at 91.14, 92, 93, 92, et cetera, et cetera. And I didn't get filled on all of them. Now, what the worst case scenario here is that Facebook takes off, I don't get filled on any shares, and then I just lose this money, right? And then the other bullish plays I had on here was some out of the money calls with the idea that maybe this thing could take off. Obviously, at this point, that's not looking like it's going to happen. Maybe by tomorrow morning, something will set up there, okay? So net, well, here, let's look at a couple of other things. So in terms of a risk profile here, you can see the worst place would be is that it opened up at 88 and just traded sideways tomorrow. In that case, I'd hit my max loss on this position, which would be $22,000. Now, obviously, this is not a $22,000 account. This is a larger account. Set this up where I'm willing to risk 4% of my account on the trade. And the amount you're willing to risk on a trade is completely up to you, okay, based on your own risk profile. But, you know, I wouldn't do more than about that because you want to assume disaster and then plan from there. At this point, we're at about $95, give or take. So if we're there, you know, by expiration, you can see there'll be a little bit of profit there. And then, of course, if this thing could, say, take off and go to $103 by the end of the week, then, you know, we're talking some pretty decent profits. Don't know what's going to happen. Obviously, you know, the expected move was $7. So if it goes up the expected move, that was great. And then if it turns into something like an Amazon or Google, that'd be great. But honestly, if that's going to happen, that would typically already have happened. Okay, so we'd be looking for a smaller move. And then another trade that's coming up here for earnings is Tesla. Now they keep the earnings date on here continues to be a moving target. I think we had July 31st on Yahoo Finance, but TradeStation has had August 5th with a question mark, and we did that one just because that's where the implied volatility was. It looks like that's going to be the case. And at this point, I still think it would make sense for a little bit of a rally in earnings, obviously an increase in implied volatility. So I'm looking for long options here to benefit from that, and then short options, i.e. selling puts to kind of help fund that, and going from there. So that's going to be the one, kind of the fun one for that week, okay? All right. So before I hop into the premium video, got a lot to cover in the premium video. So one of the biggest questions I get asked that I cannot answer because it's going to be different for everyone is, what do I do about taxes and trading, and how do I structure my trading? Do I set up an LLC? Do I go mark to market? Can I deduct expenses, et cetera, et cetera? So we're going to have Robert Greene of Green Trader Tax. He's going to come on, do a free webinar on Thursday, July 30th, 8 o'clock East Coast time. He's going to talk about what trader tax status is and the specific tax brackets breaks associated with that status, how you can qualify for trader tax status so you can take advantage of the tax breaks, the challenges option traders face, if you qualify for tax breaks, what the advantages of an entity are so you can decide if you can't trade without one, and essentially the best entities for traders. Okay, so again, Thursday, July 30th, 8 o'clock East Coast time, first name, email, and you can go to simpleroptions.com/trader tax. And I talk to Robert when I have questions regarding my trading and entities and stuff like that too. And so if you've never heard him talk before, you'll find his information a wealth of information. All right, you guys have a good night, and we'll see you at the next update.